Hello everyone and welcome back to my morning report analysis videos on Thursday 5th of January with me, which player market analyst at Hantec Markets. Going to move on to Eurodollar now, and we've had this rally in Eurodollar, but I don't really trust it. I still think that the dollar is going to be a strengthening currency through 2017. I think this is a near-term correction against the dollar. I don't think it's going to last particularly long. You have had a near-term sort of move higher through the early part of the session today to 105.75, but that's been sold into sort of 60 or about 60 ticks off that now. The breakout above 105 figure is, I suppose, probably a factor you need to be looking out for. But there's sort of a resistance band, as you can see on this daily chart, between sort of 105 figure, which was a rebound high in late December, and then sort of 105.20 area, which is all these sort of lows here, and we're sort of underneath that now. The sort of closing high that we saw late December was 105.13, so you'd need to see a breakout on a closing basis, I think, above that level to really suggest that the bulls are in control for the near term, and I don't necessarily think they are. I mean, they could eke out a few further gains, but I think this rally is going to get sold into. You've got the RSI that's basically just unwinding back towards 50. Stochastics have ticked mildly higher, but again, nothing too significant. And I just think this is a rally that's going to get sold into, because you look at this hourly chart and you're seeing this sort of RSI giving a sell signal, actually, dropping back below 60 on the hourly. Stochastics crossing lower, MACD lines crossing lower. That's come as this dollar started to regain some ground in the last hour or so, leaving that resistance high at 105.75. 105.90 is this reaction high here, and 106.50 was the spike high. Yes, 106.50. So I think that we're going to see this sort of market just rolling over, and 105 figure area is being tested again. Initially held on the sort of drop back and also overnight, but that is a pivot line, I think, on this term chart, as you can see here. Sort of reaction high, reaction lows. So 105 figure is an important near-term pivot, and if you sort of break back below that decisively, I think you could start to see the momentum just pulling the euro-dollar lower once more. So it's interesting that this rally seems to have been sort of running out of a bit of steam over the last sort of hour or so, as the European trading just sort of gets going and the dollar starts to regain a bit of ground. The treasury yields have started to pick up again, so this is all sort of playing out in that euro-dollar correction. So I wish you good luck in your trading today, and I'll speak to you later. Thank you.